A Chinese startup's entry into the AI race is sending shockwaves through the tech sector, market leaders such as NVIDIA leading a broad-based sell-off. The company's DeepSeek AI assistant is raising concerns about American competitiveness in the AI space. Joining us now to discuss is Evan Chen, VP Portfolio Research at TD Asset Management. What fascinating developments. So glad to have you here on this. Let's talk about what DeepSeek is. I saw a few headlines before today. It didn't seem like a big deal, and suddenly it's a big deal.
Yeah, so they just released a new model last week. This model is as performant as some of the top-of-the-line Western models that exist right now. But here's the kicker. It costs 90% less than those ones to train, or so they say.
So they say. So here's the big thing, whereas the rattling of the U.S. tech establishment. How does it actually compare to other platforms? Like ChatGPT has sort of been the name we've become accustomed to in this space.
Well, on performance benchmarks, it's almost equivalent. So that's a pretty expensive model, $2.20 per query or something. The price for this, 15 cents. So you can see how someone would be scared if your top-of-the-line model is equivalent to this model out of China that's much cheaper. So, let's think of the Tour de France, 23 days. I have the top-of-the-line carbon fiber bike. I'm running, I'm going, I get first place, I'm happy. But then the guy next to me has some Facebook Marketplace bike that he's gone second place. And I'm like, what's going on? So that's sort of what's happening right now.
So we do know last week, the Trump administration announcing this project called Stargate. They gave us a $500 billion number in terms of the infrastructure investment to get the Americans dominant in the space. So if we're talking now about DeepSeek claiming that they developed this for less than $6 million, where's the disconnect here?
Yeah, I think it's important to be skeptical of everything that DeepSeek's saying. So that $6 million, $5.5 million, only includes the training run for the final model. It doesn't include, all the back-end work that they had to do. It doesn't include all the salaries of the 100+ people on the paper. It doesn't include the work of the models that they fine-tuned and put together. So I think that 5.5 is vastly underreporting, what they actually used. And then they also said they used H800s, which are the previous gen model of NVIDIA chips. Why NVIDIA is off so much today is people are afraid that maybe you don't need the top-of-the-line chip in order to create these AI models. Well, there's export restrictions on in the US, and I don't think that China wants to show their entire hand. If they were using top-line chips, they don't want the US to know that. It would just lead to shutting down of some of these ports of entries of these top-of-the-line chips.
It's obviously always hard to know how the market is going to be moving forward, but we do know the reaction in the here and now to this entry into the AI race. It's sending a lot of shockwaves to the market. It's through the tech space. We saw NVIDIA down. We're seeing power generation stocks down, uranium. From a market perspective, from an investor perspective, how should we be thinking about this DeepSeek technology?
Yeah, I think you covered a lot of it. I'm going to bucket these stocks into 3 buckets, let's say. Let's call it enterprise spending. So let's think of like software, hyperscalers, cloud providers. Second one's power generation, GE Vernova, some of these power line companies, cooling racks. And the third is, utilities and semiconductor stocks. So NVIDIA itself, Broadcom, some of these names that you said. So I think those the last two, semiconductors and power, there's a little bit of a question mark going on because while we know that that $5.5 million number probably isn't right, there may be something going on behind the scenes. So I think there's a little bit of a question mark there. On enterprise, I think this is an opportunity in some of those stocks, and I think the move is overdone. And the reason for that is if we have a cheaper model, that's just cheaper intelligence, cheaper AI, and generally what happens with these input technologies, so think of like fuel, internet, memory, as the input becomes cheaper, more of it is used. I talk to a lot of companies, and they say one of the biggest barriers to entry for AI is the cost. So if we can bring the cost down, I think there's going to be more use cases in software, in the cloud, and these companies are poised to take advantage of that.
I find that so interesting because, of course, everyone sees the headline about this new entrant. They see what's happening to NVIDIA and other stocks. But when you talked about opportunity there, suddenly it just something clicks. You say, yeah, this makes sense. If the technology isn't going to be as prohibitive for some, then there will be some sectors, perhaps longer term, that could benefit from this.
For sure. If we go from hundreds of hundreds of billions of dollars to train some of this stuff to tens of billions of dollars. That just opens up the opportunity set. But you're still going to need the compute to do it. So I think the hyperscalers who own the data centers, and they may change what they put inside, but that infrastructure and the power infrastructure there is going to be valuable going forward. And we could be accelerating the pace of some of these use cases and killer apps to come.
Lastly, what this really sort of brings into focus for me, even apart from the individual players here, is that if you're looking at the tech space and you're an investor in the tech space, how quickly a new entrant can come and start shaking things up.
Oh, for sure. I've only been covering for a couple of years, but I'm never shocked by some of these things that go on and some of the technologies that happen. It's all very exciting.